Okay, peeps, welcome back. So today we're going to be going over our buy, sells, and dividends for the week of March 24th through March 30th, 2024. Let's get it. So before I get into the content, I want to let you guys know that we will be coming out with the monthly video in the next few days. So just keep a lookout for that, where we go over all of our transactions and activities and dividends and whatnot for the month. So do keep a lookout for that, but let's go ahead and get into it. So the first one that we have here is $157.11 from Webull. So we'll go over to the Webull app here. We can click on dividends. You see we got $5.82 from Aptly and $38.87 from OARC. Now we were supposed to get dividends from Clip as of yesterday. But as you guys know, yesterday was Good Friday. The stock market was closed yesterday. So for whatever reason, I don't know why, but for whatever reason, it's closed. So you can see the distribution here, 61 cents. I believe the payment date was supposed to be yesterday, but again, markets are closed on, they're closed today, but again, it's maybe a holiday or something yesterday. So probably not expecting to get these until Monday, most likely. So it's basically 184 shares times 61 cents, which comes out to be, if you click on this little clock icon here, you can see it's $112.42. You can do the math for yourself on that one if you want to. So going over to the next portfolio. So $108.66 from M1 Finance. Let me double check and make sure this is actually M1 Finance. Yes, it is. Okay. So we'll go over that now. And we'll be adding more dividend positions too, so we'll get a lot more dividend payments throughout the month. Not that we're not already getting quite a bit. You can see here the 8th, the 12th, 15th, 20th, 25th, 26th. We're getting quite a few, but we want to make it even bigger. So 1896 from EFC, 746 from USOI, 762 from RA. These are the Global X funds. These are pretty popular in the dividend community for high yielding dividend stocks or ETFs. 891 from RYLD, 639 from QYLD, 1 penny from Maine, $20.13 from ACP, 1508 from OPP, 326 from BSTZ. This is a BlackRock fund. Of course, BlackRock is they always are obviously making money. They're worth like 10 trillion or something, so we want to get a piece of that. $1.09 from CLM, 1886 from RIV, 41 cents from CRF, and 48 cents from SVOL. I think the main reason why we haven't been adding to CLM and CRF here is because we want to get the reinvestment at the NAV or whatever it's called that we've been hearing about, and I'm not sure if we can do that on this account or not. I'm going to have to call up M1 and find out from them what is possible with this. If they tell me that, like, hey, sorry, we can't really do reinvestment at the NAV, okay, not a problem. I'll just take my money somewhere else to a place that they can. So anyways, that's the dividends from M1. Now moving on to the next portfolio. So $112.57 from Robinhood. So we'll go over that real quick. Actually, before we go over that, we'll go over to Fidelity and take a look at the Grayscale Trust. So again, nothing's changed on the Grayscale Trust. We still have the same positions, still have roughly about the same amount of cash just sitting there waiting to see if there's going to be a dip or not. We're up $15,000, so it's on nearly a 200% gain. If we sold out right now, we would be more than happy with that. But again, as I reiterated in previous videos, I'm expecting this number right here and this number right here to do at least another 8 to 10x from here. Okay, I know, sounds crazy, but LTCN could easily go up to $400. If it does, that's a 10x. Okay, so that alone would put this position at nearly 6 figures, and then BCHG, this thing could easily do another 3-4x. So do the math. And then this one hasn't even started. Well, either of these haven't really even started pushing towards their all-time highs. So I would definitely say at least 150K is within the cards, which is roughly about a 10x. So we take a look here at the activities. Not really much going on with the activities. We did receive $18.80 from the SPACs account. That's Fidelity's money market account, I believe. So basically savings interest. As you guys know, the Fed funds rate is still at all-time highs. They still have not started cutting yet. So we're taking advantage of that. We're not going to let the Fed just be like, oh yeah, we're just going to hold rates for 5 years, or whatever stupid idea they come up with and not get paid off of it. Okay. We're going to take advantage of the trend or whatever it is at the time. So that's what's going on here with that. So that's where this 1880 comes from right here. Now let's go over the profits that are, let's go over the dividends that we got paid on the week first. Then we'll go over the profits and then the options premiums. So nothing from the Yield Max ETFs this week. What we did receive was, I believe, CLIP and FEPI, if I'm not mistaken. So CLIP, as you guys can see here, $92.19. We still have our positions. As a matter of fact, CLIP has been going up as of recently. I take a look at this and you guys, well, it was going up. My bad. It was going up. So it went from 1440 to 1511, and then it kind of dropped back down because of the dividend payment. So there's that. But again, KWEB is sitting at all-time lows. So kind of am expecting a really large rebound on the price of KWEB, which is going to push this ETF higher at some point in the future. Probably not that far away, if you ask me. So that's KWEB. Now we can take a look at some of these other ones. We do have pending dividend payments coming up for the Defiance ETFs. I'm not sure if they're actually going to populate here yet or not. No, they are not. Okay, so the ex-dividend date must not have shown up yet. That's fine, not a big deal. So I'll take a look at TSLP. I think TSLP might have paid during this week. I'm not sure. So TSLP, nope, that was last week. Okay, so scratch that. This is unfortunately one of the downsides of having like 50 or 60 different or 70 different positions. I think between all of our accounts, we have nearly 100 positions. So it's very difficult to keep track of sometimes, but we don't really want to be super hyper concentrated while the Fed is at, while their Fed funds rates at all-time highs and they're getting ready to cut. That's just, in my opinion, a very dangerous move. So we did buy one share of DJT. For those of you guys that don't know, that's basically Donald Trump's social media network or social media account. We are very bullish on his campaign, so we decided to actually go throw some money in there. And regardless of whether the stock goes up or not, we don't care. Okay, the whole point of this was just to put money in there to support the campaign. It's not a lot, but it's something. Okay. If everybody in the country bought one share of DJT, I mean, just imagine how valuable it would be, how much we would support his campaign. It'd be huge. I mean, what's 300 million times 6? That's a lot of money. That's like $2 billion. So we don't, and just so you guys know, this is significant because we don't ever put money into something that we do not think we're going to make money on. Okay. We don't just put money into something just for the sake of saying, oh yeah, I bought this. So this is kind of a big deal for us. So the next one here is FEPI. As you guys know, we were buying a lot of FEPI in recent days, and it did pay out nicely. So $20.38 in dividend paying income from that. So that number comes out to $112.57. Now let's get into the actual numbers for the profits. So in terms of native crypto profits, we made $138.05 from Dogecoin. As you guys know, Dogecoin has been ripping to the moon lately. We can actually take a look at that. So we're going to move over here to one window so it's much easier to see. We're actually going to go out to the weekly time frame, which is generally what we look at here for the cryptocurrencies. Sorry this is taking so long. I don't know why it's lagging like this. It's kind of annoying that it does that sometimes. It must be because of all the indicators and stuff on the chart. But so we'll take a look at Dogecoin here. As you guys can see, Dogecoin is just now starting to rip to the upside. It has broken out of this resistance, but again, the distance between Dogecoin's current price and the peak is not really that great. I mean, it is great. It's, a 3.5x, but compared to some cryptos, it's not that great. So we took $138.05 of profit on this one, and then we took $222.85 on FET, which is Fetch.ai. We have sold out of that position completely. Why did we do that? Well, it's pretty simple because there was rumors being talked about that Fetch.ai was going to do a merger with some other tokens. So we said, okay, you know what? We're in profit. We're just going to sell out of this thing. Let's just get the hell out of this position because what's going to happen is they're probably going to create a brand new token. And then if you hold the Fetch tokens, most likely, unless you have them on an exchange that does like an auto convert or something like that, they're going to become worthless. And we didn't want our money to go to waste. So we just decided to go ahead and sell it and take profit. Because what will likely happen is Fetch.ai will no longer exist and there will be a new token in its place, which means if you hold Fetch.ai at the time of that conversion, you may or may not get your money back. So that's a little concerning. If you have Fetch.ai tokens, but the token no longer exists, well, the token essentially becomes worthless. So we got out of that, and the total for that number is $360.90. So what did we do with those funds when we sold out? Well, we're going to tell you guys right now. So basically with the Doge, with the Doge profits, we took that out of Doge and put it into Filecoin. Now, I know that Filecoin has a larger market cap, or a slightly smaller market cap than Doge, but it is still a large market cap. We're aware of that, but as you guys can see, Filecoin has not really done much at all compared to some of these other meme coins. Like if we take a look at AIOZ, for example, you guys can see this thing has just absolutely shredded to the upside. Fetch.ai, just crazy moonshots. Okay, these things have just gone absolutely stupid in terms of price action. We'll take even something like Zen has actually moved up. Well, okay, never mind. Yeah, I was gonna say it moved up quite a bit, but not really. So basically, like all of the meme coins, you got. I don't even know if I have it on here anymore. Where is Shiba Inu? Okay, so whatever the case, Shiba Inu is not on here. Not sure why, but as you guys can see, a lot of these altcoins that are not meme coins, not AI related, have not really moved up a lot. So we'll just take a look at Sheep USD. You guys can see that this thing has actually pumped quite a bit, not nearly as much as something like AIOZ or Fetch, but the point of this is that we put our money into something that has not yet moved. Okay, this is generally how you want to play crypto. When you're in something that's massively in profit, it's generally a good idea to move it out of that and into something else that's about ready to go into profit. Okay. So you can see Filecoin's all the way up here at $238 at the peak, and we're currently not even at $10. So that could potentially be just to get to the highs as much as a 23x compared to Doge's 3.5x. Now with Fetch.ai, we basically sold out of this one, and we went and bought. See if I can find it on here. So I don't know why they're not. Oh, there it is. Okay. So we bought this one. We bought Banker Network. It's not really a popular altcoin, but kind of the point here is that this thing hasn't really started moving. It's less than $1. The peak is just over $9. So you're talking at least on 11x at this point. And I believe the market cap of Fetch is like several $billion, whereas the market cap of this one is only 118 million. And we did have a golden cross back here, and we are pushing up with higher lows going into this resistance. I can draw this one more time for you guys. I've showed you guys this pattern on NVIDIA and SoundHound and multiple other stocks, but once we get a breakout of here, the move could be absolutely huge out of this triangle pattern. So that's the reason why we moved the money the way that we did. So that's crypto, and then we'll go over the div profits. So dividend profits, we made $46.20 on Coney, $11.05 on Squee, and $31.57 on MSTY. So that's that one. And then the options premium, this one's going to be a little bit confusing, but I'll try to make it simple for you guys. So we lost $92 on Mara. Okay, we made $10 on Riot. We made $646 on CLSK. HUD 8, we made $105. And then again, another one on HUD 8, we actually lost looks like $321.59, and then on Cypher we lost $390. So what happened? Basically, in short, we tried to do really, really far outdated expirations. We're talking like a year or two out, with at the money covered calls, or basically slightly out of the money, which means it's barely above the at that time current market price. Of course, we made sure that if our shares got called away, we got called away for a profit. So we'd basically get maximum premium, but very little profit. But even when I think it was Riot and Hut 8 hit their strike prices, they actually hit the strike price twice on each, on 2 different days, and our shares still did not get called away. So we said, okay, screw this, we're just going to close it. So that's kind of what happened. So I can go over some of those numbers right now. So with the Cypher one, it looks like we had $660 in premium, but it cost us $1,050 to close. So that's how we came out with that $390 loss. But then we turn around and we made, well, no, I guess we technically had a profit on this one. It's hard to calculate this, but we made $565.20 on the actual shares themselves once the collateral was freed up. So Hut 8, looks like we had $750 in premium, but then it cost us $2,048 to close it out. But we also made $961.41 in profit on the underlying shares. So that's how we came out to that number. And then CLSK and Hut 8, the current Hut 8 position, are actually in the works right now. So we'll show you that in a minute. So if I go to see if I can find it, because we have like a zillion different things to look at here. So it looks like, yeah, okay. So Hut 8, the $321 loss, that was the one where we had to close for $2,040. And then Cypher, so Cypher, the 390 loss, that was the one where we had to close for $1,050, or basically 350 times 3 contracts. So that's what's going on with that. So how does it work exactly when you're doing covered calls? So basically, when the price of the underlying stock goes up, the price of the contract of the option also goes up. So it becomes more expensive when you have a selling a covered call. The price of the underlying stock goes up, but the price of the contract also simultaneously goes up. What does that mean? It means the value of your shares on the underlying become more valuable, so you're in profit on the shares. But if you wanted to close early on the contract, it becomes more expensive to close the contract on a sell call, which means it might cost you money to actually close the contract. But then if you turn around and sell the shares and choose not to hold them, then the profit that you made, or basically the credit that you make from selling the shares, offsets the debit that you had to pay from covering the options contract. And the inverse is also true when it comes to selling a put. When you do cash secured puts, the idea is that you want the stock price to go up so that the contract can expire worthless, because the further up it moves away from the price, that means you're not going to get assigned shares at a price below the market price. But if the shares go down, then the contract becomes more expensive to close. Not only that, you're basically at a drawdown. So it depends on where you put your where you have your strike price, but that's kind of what goes on with that. So anyways, so CLSK, we'll take a look at this one. So this is a real example of what it looks like. So for this one, we got basically, let's see here. So for right, because it's the same strike price. So $226 on one contract, $2.10 on 2 contracts. So that comes out to a total of $646. But you guys will notice that up here it says $3.03. So if I were just to say, you know what, screw this, I want to close my 3 contracts right now, it's going to cost me $930 to close it. Whereas the premium are received with $646. So it would cost me about $300 to get out of this position and not be assigned the shares at $23.50. Reason being, again, because the strike price was at $23.50, and the current price is at 1909. So the current price is lower than the strike price, which means that the value of the contract is going to go up. Whereas the opposite is true. If, let's say, CLSK's market price was at like $25 and the strike price was at $23.50, I would actually get paid to close this contract. So that's what's going on with that. We can take a look at HUD 8 here too. So HUD 8 looks like it's actually, yeah, this one's also below the strike price. So you guys can see we got 105 in credit, but again, it would cost $125 to close. So we'd lose about 20 bucks on the trade if we closed it, but we do actually want to get assigned these shares. That's the reason why we did an at the money put, because we want these shares. So that way, when they go up in price, we can turn around and sell a covered call. So anyways, the total of all these numbers combined comes out to $804.27 on the week. So even though we did take a small loss this week of $42.59 on the options premium, we still made $800. So not a bad week, honestly. Basically, what we learned from the options that we were doing was that it didn't have the effect that we thought it would. So we're just going to basically go with weekly options at this point, because crypto is volatile and we don't really want to have our capital tied up for, a month where we're waiting for the strike price to get hit. I think weekly options is probably better. We'll probably just run the wheel strategy on this. Excuse me. And, if we can keep it going at this rate, we can procure another $700 a week or $800 a week in options premium, which we will then use to basically buy more crypto and dividend paying stocks for the remainder of the crypto bull run. So anyways, hope y'all enjoyed this content. Please like, comment, and subscribe, and we will see y'all later. Peace.